Hello, good day, guys. So, welcome to another lesson in the Panorama Forex Academy. Today, we're going to be talking about something very vital. We're going to be talking about key levels. We're going to be talking about key levels and POIs. It's basically the same thing, all right? POI there, the full meaning is an abbreviation for point of interest. The P for point, the O for of, and the I for interest. All right. So please pay attention to this video. Get your books and your biros. Let's go straight to the business of today. All right. So what are key levels? What are POIs? What are points of interest? Very simple definition I've crafted for it actually. So point of interest, these are areas of interest where we look to buy or sell. I'll come again. Key levels and POIs are basically areas of interest where we look to buy or sell. Before I go further into this explanation, if you've been following the previous videos, you will hear me say that in a bullish market, we get to buy at the higher low, not the higher high of the trending market. While in the bearish market, that's the market that is sloping downwards, we get to buy at the lower high, not the lower low of the trending market. All right. So before I go to my chart and give you examples of what key levels are, let me tell you the types of key levels that we have. We have thousands and not thousands basically, but we have hundreds and plenty of POIs. You understand? They are indicator-based POIs. But why I normally use pure price action, like when I mean pure price action, I don't use indicators. Those of us that are not familiar with indicators are basically those lines you will see around your chart. You understand? I don't have issues with it actually, but that's not my style of trading. I just like seeing my chart clear like this, so I'll be able to read the candlesticks properly. All right, so yeah, so there are many types of QI and many types of key levels. Still the same thing, key levels. So I gave just a few here, and I'll be telling us the amount of key levels we're going to be dealing with. It's good to always keep things as simple as possible. So number one, we have support. Support is a key level, which I will give the example now. Support is a key level that key levels basically again are areas that once price enters, you are looking to either buy from that point or sell from that point. You understand? Resistance is also a POI, it's also a key level. You understand? Once price gets to your resistance, you'll be looking to buy, you'll be looking to sell. All right, once price gets to your support, you'll be looking to buy. And once price gets to your resistance, you'll be looking to sell. It's basically a key level, very strong key level that helps. I'll still go to my chart now and explain. We have order blocks. Order block is a type of key level that once price gets to, you can either buy or sell depending on the trend of the market and depending on how you mark the order block. I'll also be teaching us how to draw our support, our resistance, and our order block. In as much as I've thought about support and resistance before, we'll still be dealing with it again. All right. We also have what we call the Fibonacci levels. And using that Fibonacci is what we call the Fibonacci retracements. There are different types of Fibonacci indicators. So Fibonacci retracement levels is one indicator we use as our key levels. You understand? It helps us because when price gets to a particular level, we can choose either we want to buy or sell depending on the trend of the market. All right, I'll still give chart examples, no worries. I'm just giving the types. This is just something you should write down. I'm still giving the types of key levels that we have. And we have imbalances. Imbalances are basically prices, gaps or area of how will I put the word now, where the market didn't do much. You understand? Price tend to come back to those imbalances to fill them up before rallying to its original direction again. So when price retraces back into those imbalances, that moment when the price is bouncing off it again, that imbalance can also be called a key level. You understand? There are many key levels, but just have these support, resistance, order block, Fibonacci levels, and imbalances as a head knowledge, you understand? Because these are basically the key levels we are going to be dealing with in the Panorama Forex Academy. And believe me, it's more than enough for you. You don't really need you don't need to know almost everything in this Forex market before you start being profitable or before you start making profits in the market. And remember what I will always say, keep it simple, right? So the first type of key level we have support, all right? Before in the next video, I'll be talking about order blocks. That's one of the strongest key level we'll be using in the Panorama Forex Academy, aside support and resistance. So I'll be showing you guys how to draw the order blocks properly. But for now, let me one by one show you on charts how these key levels are. All right, so support, right? Support. Now support are basically key levels that price tend to bounce off. You understand? Just let me give you an example. If you've not seen the video on support and resistance I made, please go and watch it in the previous videos in the log of Panorama Forex Academy in this YouTube channel. You'll see support and resistance there. Do well to watch it, all right? But support are basically key levels that when price enters, price tends to bounce off them for a buy. You understand? And there are areas that we look to buy from, all right? For instance, now, if you look at your charts, for instance, now, where price tends to reject off very well, that place can be called a support. See, somewhere like here now, this is a support. Why? Because price tends to have bounced off here once, bounced off here twice, and 3 times. You know basically that here's the support. Price is failing to break below this level here. So that's a key level you can actually really take a buy trade from, all right? So that's the support. One best way to understand support and resistance is this. Just see support as the floor and see resistance as the ceiling. Anything that resists price from going upward is called a anything that resists price, anything that resists price from going upward is called a resistance. You understand? So just see the resistance as the ceiling and see support as the floor. Anything that stops price from going downward, or that area where price is failing to break downwards, is called a support. All right, so this is basically a support, and where price, you see that price has bounced here once, twice, and 3 times. That is a very strong support. And talking about resistance again, this is a resistance. This is a resistance here. All right, let me bring my tool. This is a resistance here. This is a resistance here. Why? Because price tends to have rejected here, rejected here, rejected here, rejected here, and rejected here. So there's some kind of resistance here. You understand? Many times it will not be perfectly smooth that all the whole, highs and the lows will be smooth like in the same levels. But if you have an eagle eye, you will know that this place, price tends to be bouncing off here very well. So now you could have taken a sell here, a sell here, a sell here, or a sell here. The same way you could have taken a buy trade here, a buy trade here, and a buy trade here. And if you buy, you see the way the candles are actually really, rejecting off those places. All right, now you see, let me give one example of support and resistance again. All right, so this is also a support again. Understand? Because price tends to have bounced away from here once, twice. Sorry, this is a resistance. Because the resistance is the upper part, all right? So you could have sold from either here or here, and you see all the pips that will have been yours, all right? So this place is also a resistance. You see it here now, and there's what we call when resistance turns to support and support turns to resistance. Something like this, for instance. Something like this, for instance. Sorry about that. Something like this. You clearly had a support here, all right? See something. Support can turn resistance, and resistance can turn support. This was clearly a support because price was failing to break downwards. Price bounced here or bounced here up. And see what happened. We know here to be a support. But once price broke below it, here like this, as price retested back to the support, now it's a resistance because Price has failed to break off it again to the upside. Now price is falling down. You understand what I'm talking about? And when price finally broke the resistance again, it came back to test it as a support again upward. So support and resistance, they can work hand in glove. You understand? A support can change into a resistance, and a resistance can change into a support. But you have to know market structure very well when marking that out. So the next key level we're going to be talking about is order blocks. Order blocks are basically Order blocks are basically key levels. This is going to be quite an explanation. That's why you have to pay attention to the next video I'm going to do on order blocks. The whole video I'm going to be explaining order blocks. But order blocks are basically the last in a bearish trend is the last bullish candle. Right? So let me zoom in. For instance. The last bullish candle before a bearish expansion. That's an order block. You understand? That's for a bearish order block. You understand? Like this last bullish candle is the green candle, right? Last bullish candle before you see something. See how when the price entered into it, see the way price reacted off it. You understand? That's what I'm talking about. And why in a bullish market, the order block is the last bearish candle before a bullish expansion. All right. So something like this. Oh, sorry. Okay, this last candle now before the expansion to the upside. This last bearish candle, that's an order block also, you see, and price rallied, came to test it and go upward, you understand? So with time, you know how to put all the whole key levels in place. This is just me giving an example, you understand? I'm not really analyzing the market to take a trade, you understand? Yeah, so we have Fibonacci levels and imbalances. So this is basically what Fibonacci is. This is, let me bring out a Fibonacci tool. All right, where is my Fibonacci now? Sorry. This is my Fibonacci here. All right, you can draw your Fibonacci from a swing low to a swing high in a bullish market. All right, and see what happened when price entered here, see the way it reacted off. Or you can draw your Fibonacci in a bearish market from the swing high to the swing low, something like this. From this swing high to the swing low, like this. You understand? Our Fibonacci always have multiple levels, but this one only has 3 because I was the one who edited it. So that was how that Fibonacci is a key level also. Once price reach the 100%, it can retrace. Reach the 50%, it can retrace, something like that. Yeah. And lastly, we have the imbalances. You understand? Imbalance are regions where, see something, for instance. Yeah. Regions like this, for instance. We look at this particular candle here. This candle here, look at it. This particular green candle now. This space between this wick, you count 3 candles. 1, 2, 3. The middle one, the particular space between this candle here and this candle here, that space in between there is called your imbalance. All right. So you bring out your tool like this. You mark out from this particular region to this particular region. That's your imbalance. And see what happened when price came back into it in this 4th candle. So the price reacted off it. You understand? So me using just a particular object, this rectangular tool, to mark both my support, resistance, imbalance, and order block is just a simple way to simplify my chart. I don't want to make my chart very clumsy. All right. So that's all you need to know about key levels. You understand? Like in the surface, actually, you understand there are many key levels, but this key levels is enough for you to enter lovely trade. So go back to your charts, back test them very well. So in the next video, I'm going to be talking about order blocks. Order blocks is one key level I don't joke with. You understand? Telling you types of order blocks, the valid types of order blocks, because there are plenty type of order blocks. All right. And pay attention very well to the next video. But with this little information you've had in this video about key level, you can go back to your charts in your MT5 to draw them out. Use this rectangular tool to draw your support and resistance, and also your order blocks and imbalances also. But I would advise you to focus on only your support and resistance and order block. Those three, you understand. Fibonacci and imbalances, they are a little bit more complicated, you understand, for a beginner. But as time goes on, we'll deal with them. All right, so that's basically that about that. I hope you learned something today. Please jot out something. The best thing you can do for yourself is to continue learning. All right. So this is, I don't know, enter my charts like this. I just get to see many things. This is under imbalance here. This is under imbalance here like this. You understand? So keep on doing what you got to do to make yourself a very good trader. Cheers and God bless. See you at the top. All right.